Welcome to the Data Cloud Podcast, Liam. We're delighted to have you with us.
Thank you, Dana. Pleasure. Looking forward to it.
Yeah, it's a very interesting use case. Among the most promising ways that data science and business intersect is when an entirely new service or services and use cases can emerge. And you've been able at S&P Global Market Intelligence to identify an underutilized data resource of the legacy transcripts of corporate results reports to financial analysts and create new insights for business leaders. These new services show innovative ways that AI and human behavior can reinforce each other for multiple benefits. Tell us how you're using technology to improve how people better communicate.
Well, that's a great question, Dana. So, how do people better communicate? So, the genesis of all this started around 25 years ago when we were analyzing the Enron case study. Analysts on the earnings call with Enron were asking executives questions. In particular, they were asking Kenneth Lay, the CEO at the time, questions about write-downs. Now, everyone knows about the write-downs now, but back then it was just emerging in the news. Kenneth Lay didn't discuss write-downs in the presentation on the earnings calls, but there were 6 questions from analysts about write-downs in the Q&A section. That showcased to us that Kenneth Lay was being reactive rather than proactive on that topic. Kenneth Lay didn't go and preemptively tell the market in that earnings call presentation about write-downs. So he was being entirely reactive with the market on those write-downs. And then when he answered questions about the write-downs, he was being evasive. He didn't actually answer the question about write-downs. He was pivoting and entirely went off topic. So there's 2 behaviors there that we identified from Enron. One was being proactive or reactive with information. And the second one was a very straightforward behavioral characteristic. When I answer a question, do I remain on topic to the question asked, or do I go off topic? And in finance, both of those behavioral characteristics are important, and we've showcased in the research, why they're important. So that was the genesis of trying to identify these 2 behavioral characteristics from executives on earnings calls. Now, at S&P Market Intelligence, S&P Global Market Intelligence, we have a product called Machine Readable Transcripts, and that's got earnings call transcripts going back to almost 20 years of history, going back to 2006. It's approximately 250,000 earnings calls that we have in that machine readable transcript product. So we thought, okay, is there a way that we can systematically identify these 2 behaviors from executives across this massive corpus of earnings calls? And it turns out we were able to identify those two behavioral characteristics, proactiveness and on-topicness. And it turns out that when you look at them mutually exclusively, proactive executives who voluntarily give information to the market rather than being asked about it outperform their reactive peers. And on-topic executives, so executives who just simply answer the question and remain on topic to the question, outperform their off-topic peers.
So that's a very powerful result from an existing data set that you've been able to exercise new sorts of analysis on. And perhaps, we'll get into this a little later, you can then reinforce what's a good behavior from a bad behavior. So tell us a little bit about S&P Global Market Intelligence and how you're using data science to create features and services like this. What's your role in the world to which this now is an added benefit?
Sure, yeah. So S&P Market Intelligence is a division of S&P Global. Market Intelligence is essentially the data and analytical service provider to financial institutions, academics, government institutions, and corporates. So we sell data and we sell data analytical tools. I sit on a team called QRS, which stands for Quantitative Research and Solutions, that sits within Market Intelligence. And our job is essentially, we're the closest thing you can get to a client at S&P Market Intelligence. We look across the vast array of data sets that we have. We essentially try and extract the value from those data sets. And then we articulate that value to our clients through research reports, through coding notebooks or coding blueprints, or through derived data products. So that's how we extract the value from our data and then pass it on to our clients.
Right. And why is now an important and interesting time? What's coming together in terms of the technology, the price points of acquiring and using the technology, the availability of the data? Well, why are we in a unique position to start offering new services like you've been describing?
Well, we're kind of at the inflection period when it comes to technological innovation, right? The large language models have come into the fray over the past couple of years, and now we have this new shiny amazing tool that we can point to all of our textual data. And essentially that's why there's been such an uptick in interest in this. Is large language models, ChatGPT and Llama, etc., have trained themselves on all publicly available text that's on the internet. But if you think about it, that's just the first level of analysis that the large language models can do. I can go onto ChatGPT and I can find do a multitude of things that save me time versus, let's say, jumping straight onto the internet. But the next wave is let's say textual information that's behind a paywall or is very difficult to collect. So as an example, if I wanted to point a large language model to analyze those 250,000 earnings calls I was talking about, the large language model would have to go and find, first of all, the transcripts for each of those calls. It would have to identify what was the presentation section, what was the question and answer section. So we S&P Global Market Intelligence has already curated this machine readable transcript product. It has all of the metadata associated with it. I know the executives that are speaking. I know the analysts that are asking questions on the call. I can map the analysts back to their recommendations. I can map the company back to its financials. So it's the fact that we can now unleash these large language models on financial text, so that the words that the executives and the analysts articulated on the call, and try and identify and glean if there's any signals embedded into this textual or financial textual information. So we've opened up a whole box of really interesting research that you can do around financial textual information to determine if there's any alpha or signals in there that we can then either drop the code on our clients and say, here's how you go and calculate these behaviors. If you want to do it from scratch, we can containerize them and deliver the signals to our clients directly, or we can actually just drop a coding notebook on them and say, here you go, here's how you go and do it yourself. So a very interesting time to be in.
Yes. And you're looking at this through both structured and unstructured information. You're looking at the core data and the metadata, and you're also comparing it to other data sources in order to say, well, what difference can we make between how a behavior took place in an earnings call and then how the company performed over a period of time? So when we do this right, when we can take advantage of these new large language models and these data sources across both structured and unstructured, what sort of paybacks have you been able to get? What's the bottom line, so to speak?
Yeah, that's a good point, Dana. So you're right. You have transcripts sitting in one corner. You have pricing information for the company sitting in another. You have the financials of the company sitting in another area. So one of the benefits of using Snowflake for this analysis is that all of S&P Global Market Intelligence data sets are available on Snowflake. So first things first is you have all of these very important company-specific data points in one place. So I can go in and use the large language model to analyze the text, but I know then that this text was from an earnings call that was on the 1st of April 2025. I also have the pricing information from the 1st of April 2025. I also have the company's first quarter results. So you're able to create this data infrastructure where you have all of the important information in one place. And if I derive a signal from a large language model, I can then map that back to the company's financials, and I can map it back to the company's price. So I'm able to understand if there's any behaviors or any signals that the executive has spoken on the call. I can then see if that correlates with an increase or a decrease in the price movement.
And so what have you found when you do this comparison? What sort of results are you getting in terms of saying, we now see something we didn't see before?
Sure. Yeah. So when we look at the two behavioral characteristics that we identified, and again, I can go into the weeds later on how we built those two signals. But when we look at a proactive executive, essentially we come up with a score on whether or not the executive is a proactive executive, or whether or not they're a reactive executive. So let's say I've got an earnings call that happens on, let's say, the 15th of March. I now have a score that says, okay, this executive was proactive. Let's say there's another call that happens on the 15th of April, and it's an executive that's reactive. What we do is at the end of every month, we identify, let's say we're looking at the S&P 500, we identify every executive that had an earnings call in that month. And if the executives were proactive on that earnings call, and if they were in the top 20% of proactive executives, we would build a long portfolio. We would build a long portfolio of those companies. And then on the short side, we would build a short portfolio of executives who are reactive. So let's say it's the S&P 500, the end of April, we have 100 executives who are proactive and 100 executives who are reactive, 20% of each. And we hold that long portfolio until the next month, and then we resample it, and the same with the short portfolio. When you do that over a 17-year period, rebalancing at the end of every month, proactive executives or firms with proactive executives outperform their reactive peers. And it's they generate something like, I think, 250 or 300 basis points of pure alpha per year. Now, that's one signal that we identified. A second signal that we identified was an on-topic alignment. So when an executive answers a question and remains on topic, again, we go long the top 20% of on-topic executives, short the bottom 20%. That generates around 350 basis points of alpha per year. So just without even looking at financials, without even analyzing any other information about the company, just those two signals plus the price movements, you're able to identify companies that outperform and underperform.
Right. So that's fascinating and very valuable. You can make inferences about how a company will perform based on how these executives themselves perform. But it seems to me that over time, you're creating essentially a score for trust and credibility and interview performance. And when you are able to then return this information in a feedback loop to those executives, they perhaps can improve how they communicate. And that's where we started our conversation. So have we gotten to the point where we're able to take this analysis using this great data across multiple sources and apply these analysis tools to then bring it back to the person and say, aha, AI is going to help you be a better executive?
Absolutely. So if you think about it, there's multiple use cases, but the two main use cases here are just investment managers, asset managers who want a new signal to be able to identify companies that outperform and underperform to build, stock portfolios. But then there's also corporates, right? So if I'm a CEO of a corporation, I now have some valuable information, right? I know that if the market is looking for some information, it benefits me to be proactive with that information and give it to the market rather than them look for it. And the second component, very straightforward. If I'm an executive and I don't answer a question and remain on topic, I'm penalized for it. So, we already have a piece of software that we've built for investor relation departments at S&P Global Market Intelligence, where they can pipe in their pre-prepared remarks, and we can export these scores to them. So even before an earnings call happens now, executives are prepping themselves and making sure that they're ready, and that they're proactive, and that they're looking at analyst questions that have happened, let's say, so far in the earnings call season, or they know that there's going to be certain analysts that are on the call and they look at previous calls and they see that they're asking about these topics or themes. Then that means that, okay, if I'm an executive and I see last week one of my peers, my CEO peers, was asked 5 questions around tariffs, for instance, I know now that I probably have to be proactive with my information around tariffs on that call, and proactively give that information to the market. I know that I will be rewarded for that. And then second, the second component is I can now prep myself for those questions. See, the idea with the earnings calls is that the pre-prepared remarks is heavily scripted, right? The CEO writes that, but the investor relations department, communications department, marketing and legal, that is a very heavily vetted document. And essentially the CEO is an actor. They're reading a script and they're giving a presentation. What's in that presentation clearly matters. So executives are definitely spending a lot more time making sure that that presentation is as pristine as it can be.
Right.
And then the second component is that they're also prepping themselves to be much more well prepared for the Q&A section, right? Some executives might say, you know what, I can probably answer this off the cuff. And, that might be the minority. But more and more, we see executives now going in, identifying the analyst questions that were asked on previous calls, and prepping and making sure that they are able to remain on topic to those questions that they're being asked.
And I should think that on the flip side, the people who are asking the questions, if they could avail themselves of this research, they might be able to come up with better questions or put them forward in such a way that they'll get more reliable results in terms of how this company is going to perform in the future. And so that strikes me, Liam, as a very valuable process that almost any company right now that's trying to grapple with how do we monetize and benefit from AI, we look for existing data. We look for ways that we can share this data with people that will help them in their jobs, and then we monetize that as a service. It seems to me that that's a rinse and repeat sort of benefit that AI has, direct and demonstrable and significant business benefits.
Absolutely. If you think about it, we've kind of shown in the research that firms are rewarded, have higher prices if their executives are proactive and on topic versus they're being reactive and off topic. So now, there's a tool now that essentially can up the game for the executives, right? Executives know that they need to be, much more transparent. They know that there's algorithms that are watching and listening to the call and identifying if they're going off topic. So essentially, it's kind of raised the bar now for executives across the globe that they're going to have to up their game when it comes to proactiveness and on topicness.
And they don't have to guess. They have data and they have inference and they have science behind them that says, here's how you should behave, here's how you go about these questions, and here's how you're going to get the best results. So no more gut instinct, as much more of a data-driven approach.
Yeah, absolutely. And one of the things about that software that I mentioned earlier on is it helps executives write their presentation, right? So it not only does it score them on, let's say, proactiveness, but it also scores them on language complexity. Am I using overly complex language? Some previous research that we've done identified that managers who use overly complex language underperform. Managers who use much more straightforward and simple language outperform. You can also look at things like numerical transparency. So when an executive is issuing a statement, if they accompany that statement with numerical facts, it has a lot more weight than a statement without numerical facts. And an analogy I like to use is, if I'm a football manager and I'm getting analyzed by a reporter at the end of a game, and let's say football manager A is asked about their striker, and he says, well, our striker plays more than average games per season, has the highest kilometers run on the pitch, and scores more than average goals per game. And the second manager says, Our striker is in the 97 percentile for time on the pitch. On average, runs 11 kilometers and scores 1.2 goals per game. The second statement holds a lot more weight than the first statement because it's accompanied by facts. So there's these other components that can aid the executives in their prep to make sure that they're delivering concise and succinct messages to the audience. And one other thing about that software as well, we haven't embedded it into it yet, but phase 2 is where we're going to say, how do we prep them for the Q&A? So what we're going to do is we're going to feed all of the previous analyst questions from that company and that company's peers into a large language model. And then we're going to ask it to come up with hypothetical questions for the executive based on previous questions and questions of its peers. So it's almost like they'll be able to, prep for Q&A on the fly with relevant information that's coming from the LLM.
Sure, the tool will be able to predict most likely the types of questions, and that way you can advance your preparations even more so. And while this works for finance and perhaps sports, it seems to me that this is a function that you can take to almost any instance where you have important communications that you want to refine and improve. You have the data, you have the science to analyze it. Let's dig into the science a bit, Liam. What is it underneath the covers? What's the secret sauce that's allowing you to do this? And what is the partnerships, the stack, and the underlying infrastructure that's come together at this auspicious time to enable you to do this fairly quickly and straightforwardly?
Sure. I'll start with the second, the latter part first. So we use Snowflake's Cortex AI platform. All of S&P Global Market Intelligence data sets are available on Snowflake. And the reason we wanted to use that infrastructure was you can essentially pick large language model APIs off a shelf from Snowflake. And there's other vector embedding tools and summarization tools that you can use in Snowflake. So the fact that we had, all of that data sets that I was talking about earlier on, the textual data, the pricing data, the financial data, all in Snowflake, available on Snowflake, but then also the ability for vector embeddings, large language models, summarization tools. It just meant that we kind of had a one-stop shop to be able to do this analysis. So that's one component that was quite powerful. The tech stack that we used was, let's start with, say, on-topicness, which is how do you identify if somebody's answered a question and remained on topic? Well, if they remain on topic, they're going to use similar concepts, topics, and language that was used in the question. So it means that we have to look at the question, at the language in the question, we have to look at the language in the answer, and we have to compare them to see if they're using similar concepts and similar topics. And we do that by taking the question and taking the answer pair, and we use large language model vector embeddings to turn that textual data in the question and answer into numerical data. So think about vector embeddings as just a zip code or a postcode for text. So now that we've got numerical data for the question and answer, we can now compare that numerical data. And if you remember high school trigonometry or secondary school trigonometry, when I look at two vectors, if I get the cosine of those vectors, I can determine if they're similar or not. So if I have two vectors that are exactly the same, the angle between them is going to be 0. And the cosine of 0 is 1. So if I have a vector that is the exact same, it's going to have a cosine score of 1. So as an example, the only time you get a cosine of score of 1 in a Q&A pair is if an analyst said, what's your guidance for the fourth quarter? And the CEO said, did you say what is our guidance for the fourth quarter? That's when you've got a perfect match. But that rarely happens. And when it does happen, we fold that Q&A pair into the next Q&A pair to combine the two of them. So what happens is that when you calculate a cosine similarity score for the question vector and the answer vector, a manager that is on topic will have a high cosine score, close to 1, and a manager or an executive who is off topic will have a lower score. So we can essentially now have a score. It's a ratio, anywhere between 0 and 1. And what we do then is we just go long, short that score. So managers with a high score are on topic, and we build long portfolios from them. Managers with a low score are off topic, and we build short portfolios with them.
Well, I can certainly see where a chief executive or a financial officer that had this tool available to them would want to take advantage of it, and certainly be thinking that if my competition is doing this and I'm not, then I'm at a significant disadvantage. So it seems like it's a no-brainer that you'd want to avail yourself of these services.
Absolutely, yeah. If you want to be ahead of the game, then you need to be a CEO that analyzes your own language and how you articulate your results and the operations of your company to shareholders. And there's so what once we're in the technical bit, Dana, the interesting thing is that for on topicness, we looked at the question, we look at the answer, and we see if they're using similar concepts or language. But for the proactiveness, it's a bit more technical, right? Essentially, what we have to do is we have to identify the topics that the analysts are asking in their questions, and we have to determine were those topics mentioned in the pre-prepared remarks. Now, there's an old school natural language processing way that you can do that by counting up and identifying the topics in the question, seeing if they're in the pre-prepared remarks, and coming up with a scoring mechanism for that. But actually, what we did is we looked and we trained an LLM or through prompt engineering to pretend it was an executive on an earnings call. And what we did is we fed that LLM executive the analyst questions, and we asked it. We said, pretend you're an executive on an earnings call and answer these sell-side analyst questions. Now, the difference is that we ring-fenced the LLM to be able to answer the questions from the pre-prepared remarks, right? So that meant the LLM answered the analyst question, but only used the text from the pre-prepared remarks to be able to answer that question. And then we did the same process, right? We take the LLM answer and the original analyst question, and we compare them, right? We run the cosine similarity score on them. So if the LLM was on topic, it meant that, if the LLM was on topic, it meant that topic must have been covered in the pre-prepared remarks, meaning that the executive was proactive. And if the LLM was off topic, it meant that it couldn't answer the question, so that topic wasn't covered in the pre-prepared remarks, meaning that the executive was being reactive when they were answering that question.
That could tell you we need to go, if this happened in real time, then these analysts asking questions could get that red flag and say, oh, I need to drill down on that question. The LLM says that this is a potential area for a deeper dive.
Yeah, so if you had a sell-side analyst who was waiting on the call to answer their question, and they had an analyst that was, an analyst before them that asked the question, if they had something that was in real time to tell them, this topic wasn't covered in the pre-prepared remarks and it might be important, they could potentially use their airtime to ask that question as well.
Yeah, it's fascinating how you can take this in different tangents, and so let's look at that. What comes next? You mentioned Snowflake Cortex. We see more and more agents coming on board these days as we have more agentic AI capabilities. Where might this lead to? Is this just the scratching the surface, Liam?
Well, there's an opportunity there for executives probably to set up some kind of sell-side analyst agent, LLM agent, right? They would train that sell-side analyst to look at all questions that analysts have asked previously on their earnings calls. They could look at questions that analyst has asked on that company's peers and competitors. And then they could essentially input all of those questions into an LLM. And then that LLM could come up with hypothetical questions, potentially even based on their presentation. So like a real life agent to help them prep for earnings calls, to make sure they're sharp, concise, and on topic on earnings calls.
So the equivalent of a AI sparring partner that you could get in the ring with and have a few rounds before you get out into the real world.
That's it. Yeah, exactly. Yeah, prep yourself for those 4 calls a year.
Very interesting.
And one thing to note as well is that, the benefit of Snowflake Cortex when we did this work is, I think we processed 192,000 earnings call transcripts, and there's approximately 20 to 30 analyst questions in each transcript. So that's 2.2 million questions. So we gave 2.2 million questions to the LLM to answer, and then the LLM spit out 2.2 million answers. So to be able to systematically do that was a great benefit, and the fact that when you look at that much of a corpus of earnings calls to show that systematically proactiveness and on-topicness matter. There's statistical significance there that showcases that this isn't just random. Proactive managers outperform reactive, and on-topic managers outperform their off-topic peers. But actually, interesting enough, Dana, what we did is we tested those two signals mutually exclusively. And then we said, okay, well, what happens when you have an executive that exhibits both of those characteristics? So we came up with 4 communication styles. One was, the first one was proactive and on topic. So these are executives who give the market what they want. They're proactive with information. And when the analysts ask questions, they're on topic. We then had proactive and off topic, reactive and on topic. And then the flip side was reactive and off topic managers. So this is where communication is totally broken down. So they're being reactive. So the analysts aren't getting the information they want from the presentation. And when executives are quizzed for that information, they're going off topic. So it's almost like a double whammy. Executives aren't putting it in. Maybe they're avoiding the subject or the topic. And when they're pressed on that topic, they're again being evasive and they're avoiding it. What we've noticed is that in the research, reactive and off-topic executives are significantly penalized versus their proactive and on-topic peers. So when you combine the two signals together, it actually is a much more powerful signal than having them mutually exclusive.
Well, it certainly sounds like a must-have tool for the busy executive who can move markets with their words or lack of words. So a very interesting use case that I think opens up a whole new era of different types of tools across all sorts of different types of communication. And Liam, you're going to be presenting more detail about this at the Snowflake Summit this June in San Francisco. I'm sure that will be a well-attended event.
Yes, absolutely. We're really looking forward to that. So I'm presenting on the Monday. I've got a 45-minute presentation. I'll be getting into the weeds on, the economic rationale and how we constructed the signals and some of the backtest results. And then actually on the Thursday, we've got a hands-on lab. So if you think about it, I'm handling the theory, let's say on the Monday, and then there's a 90-minute hands-on lab on the Thursday for any quants or any data scientists that really want to get into the weeds and replicate our work.
Well, great. I'm afraid we'll have to leave it there. Thanks so much to our latest Data Cloud podcast guest, Liam Hynes, Global Head of New Product Development at S&P Global Market Intelligence. We really appreciate your sharing your thoughts, experience in this fascinating use case, Liam.
My pleasure, Dana. Thanks a million.